Let's jump right into it. Michael, last time you were on CNBC, you said that Bitcoin would go up forever. I want you to clarify those comments. Does anything go up forever? Do you stand behind that?
Yeah, my point is that Bitcoin's never going to be more than 21 million Bitcoin. So it's a very fixed supply. It's the only scarcity that anybody can invest in the world. Every other asset that you can buy as an inflation hedge, like real estate or stocks or gold or commodities, all of those things have a supply that's going to increase as the price goes up. But you can't increase the supply of Bitcoin. So if you look at the world currencies, they're inflating at 10% or more a year for the past 30 years, maybe as much as 14% a year. You can expect they'll keep inflating for the next 30 years. And so Bitcoin measured in currencies of the world and in currency derivatives is just going to keep going up with volatility, albeit.
Sure, but forever, Samson, nothing goes up forever. You have a fixed supply of gold as well. I mean, this sounds like something someone might say at the peak, you could argue.
Gold is not fixed, Deirdre, right? Gold is increasing in supply at 2% a year in the physical regime, and bankers can rehypothecate gold, and they can print 100 ounces of paper gold for every real ounce of gold. And so Bitcoin is the dominant digital monetary network, and because it's dominant and because it's fixed, it means that it's the most reliable, highest integrity, scarcest thing in the financial universe.
It's going up.
Does it go up
forever, Deirdre?
I'm stuck on this point. I want to hear both of you say or not say that it's going to go up forever. Samson, go ahead.
It's going up forever, Deirdre. Forever.
I mean, Michael, do you agree with that? You're going to stand behind that comment, going up forever?
Bitcoin is going up forever, Deirdre. Forever.
Guys, come on.
Got involved in Bitcoin, and you'd come to a room. Every person you met was interesting and different, and you felt like you knew them your whole life sometimes. And I'd never had that feeling before. Many of us were in places that used to be free, and the freedom went away, and a lot of them moved to Texas. And so one benefit of having an in-person community is if things got really bad, I know there's people who will look out for me, and I got people I'm going to look out for. So it's really exciting to just have this group of people that you share so many values with.
It's not only foreign countries that are being used by this system. It's really anybody in the lower and the middle classes that don't have the means to save in assets. If they're saving in dollars, perhaps they're not getting as rug pulled as other countries, but they're still getting rug pulled, maybe to a lesser extent, but they're still getting screwed. The only benefactors of this system, from my perspective, are the U.S. government and extremely wealthy people that do have the
extremely
means
wealthy
to save
people that
assets.
have large holdings of assets that inflate along with the dollar. You know, I mean, that's it. I mean, you know, your average person now is going to get hurt because the housing market is it's not going to be like 2008, you know, but it's going to go down 20-25% in my mind. I think it's highly likely that it drops 20 to 25%. That's going to hurt a lot of people. They borrowed against their house in order to fix it up. You know, think about it. You're sitting at home for 2 fucking years. They had us locked down. You know, you're sitting at home, you're working from home. You're like, well, you know, I got to fix up this office. I can't have these Zoom calls in here. I mean, I did it myself, you know, I can't have these Zoom calls in here while I'm, you know, I've got a dog bed behind me. You know, I mean, like you've got to do some stuff. So you decide, I'm going to take out some money. The house is way up, you know, it's fine. I'm just going to remortgage it, take some money out, whatever. And then all of a sudden you look at it and you're like, oh shit, now I own more on the house than it's worth. You know, luckily it hasn't happened to me because I didn't take out money off the house. But you know, that's what people are going to suffer through, and we're not seeing the credit card debt rise as much as I thought we would yet. And I think I don't know. I'm going to be very interested to see where this shakes out next year in 2023, because people still have money in the bank. And I don't know if they're so worried that credit is going to get pulled from them, that credit cards are going to shut down their accounts, or that something's going to happen, that they want to keep actual cash in the bank that they can draw from, while they borrow on credit cards too. I don't know what's going on there, but it's going to be very interesting in the next year to see how this plays out. And unfortunate. I think it's going to be painful for some people. And, so be careful.
Oh, man. Okay, so James, how does Bitcoin fixes this? How will the lessons of the past not be forgotten once again?
Yeah, well, I don't know if the lessons of the past will not be forgotten. We're stupid humans. We have this herd mentality that the fact that we trust the government, the fact that so many people just have given up. They're like, oh, well, there's nothing I can do. It's the government. If I say anything, they're going to come after me. And they're probably right. I mean, I don't know. So but at some point people get tired of it. And so there will come a time where Bitcoin separates itself. It decouples from those risk assets. And that's going to take understanding. We've got to get mainstream media to stop beating on Bitcoin because of because it's boring, or because they call it the leading risk asset, and it's acting like that because of that mentality. It's coupled with risk assets right now. The Greenpeace coming out with those stupid videos and those posts about Bitcoin taking up more energy than whatever. I mean, like it's insane. And these people have an agenda, and they think for some reason that humans can be productive without using energy. They're fucking delusional, So once we get, that's one part, you get the misinformation, disinformation out of the way, and hopefully with legislation that will help. I think that having legislation and declaring Bitcoin a store of value and a commodity and having it regulated properly, that's going to help. Having an ETF, a spot ETF approved, that will help. That will help small offices. And a lot of people are like, well, nobody deserves it if they can't figure out how to put it in a wallet. Okay, well, I hear you. But if you want this to be adopted, widespread adoption, it's got to be easier. People have to be able to just look at a screen and know that they own it. And if you can buy a spot ETF that is highly regulated, that shows that you own Bitcoin below that if you called it, that there would be Bitcoin attached to that, and you can see in all the wallets exactly where it is, then that's a huge positive. It's going to get family offices involved. It's going to get high net worth people who are just not comfortable with holding their own keys or whatever it may be involved. And that's a huge first step, just to get more capital into the system. And then once you've got five asset managers that control $30 trillion of investment assets. $30 trillion. BlackRock, Fidelity, Vanguard, State Street, and Morgan Stanley. 5 asset managers. Think about that. Now you've got a couple of them already out announcing that they are involved in Bitcoin, that they have products that the customers can buy it, their investors can buy it. And so that's important. And when it becomes a separate asset class for those 5 institutions, game over. Everybody has to own some. There's just no way around it. That's $30 trillion out of $400 trillion of investment assets in this world. Everybody has to own it, period. So that's going to be a huge development, and that's going to start with understanding. So, I'm out there talking to people that I know that are in the institutional space. They're still way behind, way behind the 8 ball. They have no idea what's going on. They think that it's Ethereum and Bitcoin and Hex and whatever. They're all in the same freaking boat. They don't understand it. They think, oh, well, there'll be a new, better Bitcoin. They just don't get it yet. But when they do, when they finally wake up, they're going to see it. They're going to kick themselves, and they're going to buy it at the price that they deserve. And it's going to be in the hundreds of thousands of dollars. And that's fine by me.
Something incredible happened last week. We got to see cracks in the code, the matrix shattering. We saw a Senate hearing, and Senator James Lankford out of Oklahoma was questioning Treasury Secretary Janet Yellen, and you don't get to choose anymore whether you're going to take like the red pill or the blue pill. Janet Yellen jammed an orange pill down the throats of literally anyone who saw that clip. We'll play a little bit of it here. Cue that up.
Will the deposits in every community bank in Oklahoma, regardless of their size, be fully insured now? Are they fully recovered? Every bank, every community bank in Oklahoma, regardless of the size of the deposit, will they get the same treatment that SVBP just got or Signature Bank just got?
A bank only gets that treatment if a majority of the FDIC board, a supermajority of the Fed board, and I, in consultation with the president, determine that the failure to protect uninsured depositors would create systemic risk and significant economic and financial consequences.
So what is your plan?
We made that determination.
Right. So what is your plan to keep large depositors from moving their funds out of community banks into the big banks? We have seen the mergers of banks over the past decade. I'm concerned you're about to accelerate that by encouraging anyone who has a large deposit in a community bank to say, we're not going to make you whole, but if you go to one of our preferred banks, we will make you whole at that point.
Look, I mean, that's certainly not something that we're encouraging.
That is happening right now.
Unbelievable. It just is absolutely mind-blowing the way that she explains clearly for everyone to listen to the favoritism at play in the US banking system. And what Lankford explained very clearly was that all of these regional banks are screwed. The incentive is there for everyone to pull their money, every business, every person, every family to pull their money out of a regional bank and put it with one of these too big to fail institutions that has homies in the revolving door between DC, Wall Street, and these banks, and make sure that they can argue with their homies Jamie Dimon and friends to get their losses socialized and protect their depositors, but let the regional banks fail. This is a recipe for disaster. This is un-American. This is actually the complete and final step in the nationalization of the large banks in the United States. At this point, when the US is only guaranteeing deposits for certain banks, they have already been nationalized. It's already happened, and you cannot unsee what you have just seen. You have taken the orange pill, and it was delivered by Morpheus herself, Janet Yellen. Buy some Bitcoin.
I think Bitcoin specifically, what I'm bullish about is that it creates the incentive for people to be more engaged in society. And Ben, to your point, it does this at so many levels, at a societal level, at an individual level. At a societal level, like Bitcoin aligns our incentives by giving us all skin in the game, because anyone can hold and access a piece of Bitcoin. Like the minimum amount is less than a cent for you to hold. So when the ecosystem grows in value, so does your piece of Bitcoin and your purchasing power. And the way the ecosystem grows in value is driven by the individual level incentives, because Bitcoin makes it easier for individuals to be rewarded for their contributions. So now that we can move like any amount of value over the internet without any friction or anyone's permission, like all sorts of interactions can have value attached to them, like even as small as a like on social media. And so like it's through these micro payments that's never happened before in traditional worlds. You can actually like bootstrap your like ideas, and you can receive value instantly and directly from users, which encourages you to keep like building and iterating and sharing your creations. And also from the user's point of view, like you want to support the things that you wish to exist in the world. So you allocate your funds towards shaping the direction of that project through tipping and streaming and donating. So now on both sides, there are like incentives to engage and contribute ideas, which hasn't really been possible in a world where everything kind of centralizes. But then also these actions kind of create pure price signals to show the rest of the market what's working. And as a result, all sorts of ideas can now be funded and shaped at a grassroots level where we're all aligned in wanting to do what's best for Bitcoin, because that's how we grow our wealth. It comes full circle. And I think that's kind of like the magical thing about Bitcoin that you don't really see in a traditional world where everything goes through kind of like a central entity, and the ideas get shaped top down.
Someone recently said to me, if I believe in Bitcoin as much as I say I do, then I should be shouting it from the rooftops. So here I am on the rooftop, and oi, buy Bitcoin, buy Bitcoin. Anyone? Hey lads, buy Bitcoin, yeah? Dunno, tried.
It's curious that God had to impregnate Mary, that Joseph couldn't just do it. But if Joseph had done it, then he would have had a dynasty. He would have had a powerful dynasty that would have perverted the entire future of the idea. Satoshi had to disappear. If Satoshi hadn't, he would have been the weakest link for Bitcoin. Anything he said, anything he did, any opinion he had on a BIP, whatever, would have perverted our incentives, our perspectives, never mind the amount of Bitcoin he would control. So, the Immaculate Conception of Bitcoin, more than just being a mythology, is also essential for why it can be neutral, for why it can be trusted by everybody, for why it's not just Joseph building a dynasty out of Jesus.
I don't think we have access to it right now. Yeah, I don't know how that works. Super easy. But anything else for it? One second. All right. He was explaining it to me. I don't know how it works.
We don't have that much right now, especially with how much people are pulling out. It's kind of hard just because we don't keep everything out here. So
you gotta like go to the back and get it or whatever it is, but well, it's in my account. You feel me?
I understand that, but it's not as simple as I can just go back and grab the money.
It's not like I'm asking for $50,000, bro. I'm asking for $9,000, like something. You know what I'm saying?
I understand that.
Of my money, my guy, my money. It's in my bank account, my guy.
I understand that, but it's also not mine.
So can you call somebody to ask them, can they go get it from the back? Because I didn't wait when I put it in my account, bro.
What is Bitcoin mining? In order for Bitcoin to move from one person to another, it has to be processed and put into the Bitcoin ledger. But the Bitcoin ledger is permissionless, which means anybody in the world can participate in the system. They can participate in processing transactions. That participation is called mining. They buy a special machine called an ASIC, which costs a couple $1,000s. They plug it in, it consumes electricity, and it processes transactions on the Bitcoin network. This not only provides the transactions to flow into the ledger, but it also creates a certain amount of security for the network, because the amount of electricity burned by those miners provides proof that they are committed to writing the honest truth into the ledger.
Hey guys, the Bank of Japan announced today that if 10-year bonds rise to 2%, which they're trying very hard to do, the Bank of Japan will be sitting on a $400 billion loss. That's about 8% of GDP, and in US terms, it would be about $1.8 trillion. The Fed, indeed the entire world, isn't far behind. The Fed is now technically bankrupt, liabilities are greater than assets, for the first time in its history, and it's now losing about $2 billion a week. That's about $100 billion a year. So what does this mean for the rest of us? Counterintuitively, the losses don't mean as much as it seems, because the damage was done when the money was printed. So the main real-world impact of a bankrupt central bank is that remittances paid to the government dry up. These are commissions that central banks pay to governments every year for giving them the right to counterfeit currency. In the case of the Fed, before COVID, they had been turning over about $100 billion a year to Congress in profits. It makes these profits, by the way, because the Fed prints up money, lends it out, and then books interest on those counterfeitings. Now, $100 billion is a chunk of change. It's about half what the government takes in corporate income taxes. But beyond this, there's not that much impact, even if they pile up trillions in losses. It simply means Congress won't get their $100 billion a check, $100 billion a year commission. Maybe they'll never get it again. They'll either have to cut spending, good luck with that, or they'll raise taxes again. Now, to see why, imagine you're a counterfeiter who just printed $1 million in the basement, and then you pull an all-nighter, losing 90% of it on FTX, trading altcoins. Is it a problem? Well, if you pretend the original money was real, it's a catastrophe. The worst day ever. You lost 90%, $900,000. But given the original money was fake, it's actually meaningless. It's just an annual commission you will no longer be paying to Congress anymore. Now, that doesn't mean it's harmless. It just means the losses are not the poison. The printing was the poison. Since COVID began, more than $10 trillion have been printed by the central banks of the world. So that's the Fed, the ECB, Bank of Japan, Australia, Canada. Essentially every major central bank printed up a ton of money. This is why we're getting this inflation now. And printing all that money effectively seized a huge hunk of the accumulated wealth of humanity. So take those counterfeiters in the basement and multiply that by millions and millions of them. And they all pumped those counterfeitings into your life savings, water into the wine of your accumulated wealth. Now, where did that accumulated wealth go? Almost all of it went to governments and to rich borrowers because it was used to subsidize borrowing, right? To make borrowing super cheap. They did this because they wanted to goose the economy. They also did it in order to finance the COVID lockdowns. And of course, all of it with a commission to the national governments who keep the siphon running. So whether the counterfeit dollars made a profit is irrelevant. The crime was their creation. So what's next? These bank panics all but guarantee a return to COVID-era industrial scale siphoning of humanity's wealth via, you guessed it, central bank money printing, which will lead to yet more losses, probably again, announcements like today's $1 trillion loss at the Bank of Japan. We should expect to see that scale of announcements from an increasing number of central banks. All right, we'll be watching this. See you next time.
Because it is digital, it means the money can be programmed to be spent in any way in which the central bank or the government decides. So one of my particular concerns is the World Economic Forum, because they're talking about implementing a carbon allowance. Now, this means each individual will be given a certain amount of, whether it's credit or whatever it is, carbon that they are allowed to emit. And how do they implement that? Through a central bank digital currency. So if I buy too many plane tickets, or if I buy too much meat, because those things are all supposedly very bad for the environment, my money when I go to fill up my car could then be declined. So now they're literally controlling what we can and can't do with our money. It's also important to realize that the money can expire. So during times of economic uncertainty, central banks love to print lots and lots of money, which causes inflation. But we could get to a point where they say, instead of printing money, you have to spend at least 10% of your savings in the next 3 months. If you don't spend that money in the next 3 months, then that money is going to expire. And if you can't save money, well, then you can't build long-lasting generational wealth.
Ultimately, we have this S curve of adoption. Any amount of sets that you buy on the bottom of the S is going to be ridiculous on top of the S, but you need to get there. You need to buy it at the bottom of the S, and you have to arbitrage it through freaking clown world to the other side of the S, hyper-Bitcoinization. So that's the hard part. You have to make the right decisions. If Bitcoin works, we're not smart enough to be bullish enough on it. Like, we are too stupid. If Bitcoin works, it's more likely that 37 sats equals generational wealth than 1 Bitcoin equaling $10 million. So it's like, take your bullishness, be humble about how stupid you are, and then get more bullish. The next steel, gunpowder, has been invented, which is the perfect monetary supply, on the perfect digital and known monetary supply. I mean, I think there's a lot of ways that we can describe it, but, I call it the metric system for value. Like, once the metric system was invented, like, we weren't going back. And I think Bitcoin is like that for value. It puts 21 million, it puts a denominator on things. And now you can count. Now you can actually count value. You can actually make economic decisions without the craziness. It's like gunpowder. It's like electricity. It's like fire.
This is Matthew Cratter from Trader University, and today I want to show you how you can create the next Bitcoin if you have the intelligence and you have the ambition. So there are basically two main ways that you could create the next Bitcoin. The first way is you could fork Bitcoin. The second way, of course, is to build a brand new crypto. So solution number one, fork Bitcoin and make it better. This is actually the easier option. You basically just copy Bitcoin source code. It's open source after all. You can just download it off the internet. You make a couple changes, release it to the world, and voila, you have a new and better Bitcoin. Maybe you make it faster or more scalable. Maybe it has bigger blocks. The only problem with this, though, this strategy has never worked. All forks of Bitcoin have collapsed, both relative to fiat, relative to US dollars and euros and yen, and most importantly, relative to Bitcoin. So if we look at the two largest forks, there is Bcash, and that's basically almost gone to zero against Bitcoin if you take a look at this chart, and BSV as well, which we talked about yesterday, and all of the mess surrounding it. So forking Bitcoin, you can try it, but this has not been a successful path, unfortunately. So that didn't work, so let's try solution number two. But before I talk about that, if you're finding this video helpful so far, I just ask you to hit that subscribe button. So solution number two is you build a new crypto that is harder, better, faster, stronger. Let's just get my developer friends together. Let's get some VC funding, some venture capital funding to pay for the project, because these devs need a salary, and let's start coding. Now, devs and VCs, as I said, need to be paid. So let's give them 48% of the future supply of the coin, just to be fair, because they are the early investors in this and the early devs. Voila, you have just invented Solana. Now, VCs need to dump their Solana in order to pay their LPs, which are what you call the investors in their VC funds, their limited partners. Devs need to dump their Solana, all of their initial token allocation, just like the VCs, but in this case, in order to buy a house in the Bay Area, where Solana is based, and the houses are quite expensive there, as I can tell you. And so you have the situation where both VCs and devs are natural sellers. They go on podcasts and they laugh about dumping. If you want to see how the Solana billionaire VCs were laughing at you, I made this video back in November 5th of 2021, almost right at the peak of Solana. And we can see what Solana has done since then. It looks exactly like a pump and dump, as you would expect for a VC funded coin. This is a list of initial token allocations for a lot of these base layers, these public blockchains. You can take a look and see where your coin might be. Solana was especially egregious at 48%, but you can see the red in any of these. Binance was obviously heavily insider driven, ICP, Flow, etc. And even Ethereum obviously had a large pre-mine. But this is what you need to do if you're going to develop a successful complex software project. You need to pay for it somehow. But it gets even worse, though, because those coins that I issued to insiders, so this is option number two, where I'm starting my own crypto. I issue these tokens to VCs and devs. These coins that I issued to insiders, they actually look a lot like an investment contract. And in the US, we have the Howey test, which is, the language goes like this: the investment of money in a common enterprise with a reasonable expectation of profits to be derived from the efforts of others. This is clearly Solana. This is clearly almost all of these cryptocurrencies. Now, the thing about the Howey test is you want to fail the Howey test. If you pass the Howey test, that means you're considered a security in the US and you need to have registered with the SEC. Ethereum, Solana, Cardano, you name it, all of these are clearly unregistered securities, and it's only a question of time before the regulators catch up to them. And worse, it's an unregistered security that they've been dumping on naive retail investors. Take a look at the pain that's been caused here. And that was mostly retail investors who bought the bag at the top. So Solana, all these coins, they're clearly unregistered securities. They've been dumped on naive retail investors. And so to any neutral observer, what has been created here is not a new neutral form of money. Cardano, Ethereum, Solana, these are basically software companies. They can use whatever legal moniker they want. They can pretend to have a foundation like Luna did, etc. But these are basically software companies. XRP is another example, Ripple, XRP. These are software companies that have been funded by selling unregistered securities. And XRP is obviously, Ripple is obviously being sued by the SEC for this reason. So we can say that's okay. We don't care about the SEC. We don't care about the Howey test. We're cool libertarians. We don't care about Gary Gensler or if he thinks we're using unregistered securities. And besides, we did our ICO in Japan, or we did it in Switzerland or something to try to skirt these rules. Okay, that's fine. But the problem with this is, do you really think that the world is going to adopt a new money where insiders were allocated a 15% or 20% or 30% or 48% of the initial supply? Doesn't that make that money completely non-neutral from the start? So if you're pursuing this route, this is the point at which you need to reassure investors and future holders of your money. You can just say, don't worry, our crypto's on an eventual path to decentralization. In fact, we will show you our roadmap. We've got the merge, the verge, the purge, and the splurge. And in case you think I'm just making that up, this is the Ethereum roadmap that has been set out by the bold leader, Vitalik Buterin. The only thing that's kind of strange about this is that you are claiming, or Vitalik is claiming, that Ethereum is ultrasound money, or at least the Ethereans are claiming this. But this ultrasound money has a leader. It has a CEO that has created a multi-year roadmap. This doesn't sound like a decentralized thing to me. And the other funny thing is the only thing that's not included in that roadmap is Vitalik leaving the project. And it's, again, I don't want to pick on Vitalik. This is Ethereum, this is Cardano, this is Ripple. These founders never, ever leave. Or if they leave like Jed McCaleb did, they do it in the process of dumping on everyone. So this is what these crypto projects have done. They play these games. Let's just pretend that there's no one in charge. As I said, let's do our ICO in Japan or Switzerland to avoid the SEC. Ripple, the corporation, did not issue XRP. It just magically ended up with most of the supply. These are the excuses you hear among various projects. Okay, but that's enough cynicism. Let's do this for real. Let's not be cynical. We don't want to do a pump and dump. We are going to make the perfect money. We're going to make it fungible. We're going to make it private. We're going to make it decentralized from the start. We're going to use ZK snarks. We're going to have make it perfectly fungible, no dev fee from the block reward. We're going to use delayed proof of work. We're going to do a fair launch, just like Bitcoin. If you recognize this, congratulations, you just invented Pirate Chain, which is the ticker is A followed by a number of R's, not quite that many R's. The problem with this is, and this was a very idealistic project, at least it appears to me to be one, the problem is no one cares. You can take a look at the chart of R, and if you try to do this like Pirate Chain did, it's very unlikely that it's going to go anywhere. Most people don't care about privacy, unfortunately, and it's really kind of a niche subject for most people. The other thing is it's hard to get the word out about your new crypto unless you have a large marketing budget. But the problem, as we said, is you can't have a large launch and a marketing budget without a pre-mine or initial investors who compromise the neutrality of your new crypto from the start. And this is the really special thing about Bitcoin. Bitcoin was a grassroots movement. It grew under the radar, both the radar of VCs and under the radar of government regulators, etc. And now Bitcoin is everywhere and it's forming real communities. We obviously have podcasts and YouTube channels devoted to them, and we have meetups. We have whole countries devoted to it as well. We have Bitcoin Beach in El Salvador. We have El Salvador adopting Bitcoin as legal tender. We have Bitcoin Island in the Philippines. These Bitcoin communities are popping up all around the world. So what are our conclusions about inventing our new money, inventing the next Bitcoin? As we said, there are two ways to do it. You could fork Bitcoin, but no one's going to care. People know the game. People know you just fork it and dump it on people, like Roger Ver did, for example, with Bcash, or Craig Wright has done with BSV, in my opinion. So you can't really fork Bitcoin. No one will care. That game is up. This has been tried. You can try it. You might be successful, but it's probably going to fail in the same way that Bcash and BSV did. The second way you can do it is you can set up a software company. Of course, you don't call it that. You issue unregistered securities and you dump them on retail investors as part of your funding. Good job if you do this. There's a special circle in hell, in Dante's hell, reserved for you right next to the usurers. So now I hope this intellectual exercise or thought experiment has demonstrated how special Bitcoin is. Bitcoin is special not just because of the technology, not just because of the blockchain. It's very special because of proof of work plus the blockchain, and it's very special because it was launched and initially distributed to a bunch of math nerds who care nothing about Lambos and riches, and there weren't any VCs in the room either. It grew under the radar. It grew up free from government interference. The founder left the project very, very early on and never sold or cashed in. We're talking about Satoshi, of course. No one cares that you can form a software company and create a new blockchain that has big blocks or can do a gazillion transactions per second, because that's not neutral money, and that's also not a fair launch. Blockchain is actually a really bad way of doing most things. You're almost always better off with a centralized database. And the only reason a lot of these software companies are using blockchain is because they can create a token that they can then use as a way of raising money without having to go the traditional route of registering with the SEC. And this game is rapidly coming to an end in the US, whether you like that or not. So what's the next Bitcoin? Bitcoin is the next Bitcoin. And I've said this many times, Bitcoin is the next Bitcoin. Bitcoin was a one-time brilliant invention or discovery, however you want to label it. And it was a historical accident, an accident that was brought about by a very smart individual named Satoshi Nakamoto. But this historical accident can never be repeated. And that's what I mean when I say that true digital scarcity can only be invented once. I didn't invent that saying. I can't remember where I heard it, but it's a very, very good one. True digital scarcity can only be invented once. It was Bitcoin and it is Bitcoin. So it's impossible to create the next Bitcoin for all of these reasons. And if you're ethical and if you understand how these things work, it's not a question of a new technology. It's a question as well of that fair launch and initial distribution under the radar, which is no longer possible simply because everyone knows about cryptocurrencies now. And there's no way to repeat this wonderful historical experiment that has turned out and is turning out so well. If you found this video helpful, be sure to hit that subscribe and like button. Hit the notification bell if you want to be notified when I publish my next video. And let me know your questions and comments in the comment section below. Thanks a lot for watching, and I'll see you in the next video.